Hi everyone, welcome back to Corporate Decoder, the place where we translate the corporate jargon into plain English. And today we're diving into Nutanix's latest report, and boy have they got some news that might make you raise an eyebrow or perhaps even clap your hands. So what is this document all about? Well, companies like Nutanix, they have to tell us what's going on with them pretty quickly when something important happens. This here is called a Form 8K, and it's like a public announcement system for big events. They filed this on August 27th, 2025, and it talks about two really key things. First, their financial results for the last quarter and the whole year, and second, some big news about their stock buyback program. Now, before we get into the juicy financial bits, let's quickly touch upon the housekeeping stuff companies have to do. You see these checkboxes here? They're basically asking if this report is also being used for any other special purposes like announcing new communications or maybe getting ready for a big shareholder meeting. For Nutanix, they're just sticking to the main purpose of this report. This tells us what kind of stock Nutanix has and where it's traded. They've got Class A common stock and you can buy and sell it on the Nasdaq Global Select Market. That's a pretty big stock exchange, so it tells us they're a significant player in the market. The ticker symbol you'll see for Nutanix is NTNX. This is a specific designation for companies that are still relatively young and growing fast. Companies with less than $1 billion in annual revenue can opt for this status. Nutanix is checking this box, which means they're still in that growth phase and might have some regulatory advantages designed for newer companies. They're also saying they're not opting for the extended transition period for new accounting standards, which means they're playing by the latest financial reporting rules right away. So the first big chunk of news from this report is all about how Nutanix did financially for the fiscal year ending July 31st, 2025. They put out a press release on August 27th to share these numbers, and that press release is attached to this filing for everyone to see. Basically, they're letting the world know their earnings and overall financial health. This is a bit of a legal disclaimer. It's kind of like saying, hey, we're giving you this information, but don't treat it as if we're formally stamping and approving it as part of our ongoing filings unless we specifically say so. It's a common way for companies to share preliminary or unaudited information without locking themselves into it too tightly. Imagine it as giving you a heads up without making a solemn vow legally. Now, this next part is also super important. Regulation FD stands for fair disclosure, and it's all about making sure everyone gets the same information at the same time. Companies can't just tell one person something good or bad about the company and keep it secret from everyone else. So when they have information that can move their stock price, they have to make sure it's available to all investors. This is where the exciting news really kicks in. Nutanix's board of directors, they're the big decision makers for the company. They've decided to buy back some of their own stock. And not just a little bit, they're planning to buy back up to a massive $350 million worth of their Class A common stock. This is another one of those legal disclaimers similar to the one we saw for the financial results. It's saying this announcement about the stock buyback is being shared with everyone, but it's not officially being filed in a way that makes it legally binding in the same way as some other filings unless they specifically integrate it elsewhere. It's a good practice to ensure transparency. This is essentially a link to the first press release we talked about. It contains the detailed financial results for their fourth fiscal quarter and their entire fiscal year that ended on July 31st, 2025. This is where all the numbers like revenue, profit, and expenses are laid out for everyone to analyze. And this is the link to the second press release. This one is all about the big news that the board approved that significant share repurchase program worth up to $350 million. So if you want to read the official announcements from Nutanix themselves, these are the documents to look at. Let's focus on that $350 million stock buyback. What does that actually mean for Nutanix and for you if you own their stock or are thinking about it? When a company buys back its own stock, it reduces the number of shares available in the market. This can have a few effects. First, it often signals that the company's management believe for the company to return cash to shareholders indirectly. Think of it like this: if there are fewer slices of pizza, but the same amount of total pizza, the slices you still have become relatively bigger. And here we see the signature from Rukmini Sivaraman, the Chief Financial Officer of Nutanix. It's pretty standard for the CFO to sign off on these reports as they are responsible for the company's financial accuracy. Seeing their name here adds a layer of official confirmation to the information provided. So let's try to decode the story here. Nutanix is coming off a challenging period for many tech companies, but they're making moves. The financial results themselves are the key here, and while this filing doesn't give us the actual numbers, we have to assume the press release it refers to lays them all out. The fact that they're announcing a large stock buyback program right alongside their financial results suggests they're feeling confident about their future performance and their valuation. It's a signal of faith from the top. They're effectively saying they believe their stock is a good investment for the company itself. What could this mean for Nutanix's strategy? A stock buyback can be a sign that they've hit a certain level of maturity where they're generating enough cash flow to not only reinvest in the business, but also to return value to shareholders. It might mean they see fewer external investment opportunities that offer a better return than buying their own stock. In the tech world, especially for companies in the cloud and infrastructure space, this could mean they're focusing on streamlining operations and maximizing profitability from their existing offerings rather than aggressive expansion through acquisitions. Now, for some general market context, Nutanix operates in the hybrid cloud and hyper-converged infrastructure market. This is a competitive space with big players like VMware, Dell, and HPE. Companies in this sector are constantly innovating to provide easier to manage and more efficient IT solutions for businesses. Nutanix's strategy has traditionally been about simplifying IT infrastructure, and their financial health directly impacts their ability to keep investing in research and development and compete effectively. A strong financial performance would mean they can continue to innovate, and a strong buyback signals they have the cash to do so, and believe it's a wise use of that cash. If we were to see the actual numbers from their financial results, we'd be looking for things like year-over-year revenue growth trends in their subscription revenue, which is a key metric for software companies' profitability margins and how much cash they have on hand. Are they growing fast enough? Is their profit growing even faster? Or are they spending a lot and not seeing proportional growth? A stock buyback often comes when a company feels it can manage its debt and still invest adequately in its future. If their debt levels were very high, this buyback might be viewed more cautiously, but if they have a healthy balance sheet, it's generally positive. Looking at it from a Warren Buffett perspective, he'd be interested in whether the company is truly a good business being run by good people. The stock buyback shows confidence from management, but the underlying financial performance reported in that Exhibit 99.1 press release is what will tell the real story of whether Nutanix is a fundamentally sound business. We'd want to see consistent revenue growth, improving margins, and a clear path to sustained profitability. Without those underlying numbers, the buyback is just a speculative signal. In conclusion, Nutanix is a company that has made significant announcements regarding both its financial performance and its capital allocation strategy. The substantial stock repurchase program signals management's confidence in the company's future and its current valuation. However, the true health and direction of the company will be revealed in the detailed financial results that are referenced in this filing. We need to see if the growth is sustainable, if profitability is improving, and if they can maintain their competitive edge in the dynamic cloud infrastructure market. Alright, that's our breakdown of why Nutanix filed this Form 8K. What's your take on this stock buyback, and what do glowing financial results for Nutanix might mean for their position in the market? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.